Let's put it all together and continue with explaining by examples right now. Imagine you are buying a car for $20,000. You pay $5,000 in cash from your savings. This is your equity. You take a loan of $15,000 from the bank. This is a liability for sure because you have to repay it. Your own cash is $5,000. You took $15,000 from the bank to repay this. You have to repay this amount to the bank. So it's a loan, and the loan is a liability. Your cash money from your pockets, your investment, your cash money, what you own, is your equity. The car itself is an asset because you now own it. Now let's apply the accounting equation. Assets equal liabilities plus equity. Your assets is $20,000 equal $15,000 the loan, $5,000 your money. Because to buy this car, you used your $5,000 plus the loan you took it to pay and own this car. So it's linked to each other. I have this $5,000. I went to the bank. I asked for the loan. They gave it me $15,000 to go to buy this car. So this plus this made me buy this car $20,000. Example 2. And you can see here how the equation balances. Every dollar in your business comes from either borrowing liabilities or your own investment equity. Second example. Let's say a bakery starts with $10,000 cash assets, borrows $5,000 from the bank, liability, for sure it's a liability. The owner invests $5,000 of their own money, equity. So the accounting equation would be $10,000 for sure, your cash, it's your assets. $5,000 your loan plus the liability plus $5,000 the owner invested. So here is the equation. $10,000 cash, borrows $5,000, and the owner's equity is $5,000. If the bakery buys an oven for $3,000, the cash reduces for sure because he paid $3,000 from his cash, but now it's $7,000, and but the assets remain $3,000 oven. So here it's divided, the assets. Divided $7,000 cash plus $3,000 oven equal $5,000 the loan plus $5,000 the owner's investment. So now you understand the equation, the accounting equation. It helps businesses track their money and stay financially healthy. In our next lesson, we'll apply these concepts using real transaction with debit and credit, so stay tuned. Simple terms. Assets, what you own, cash, building, equipment, inventory, as I said before in the first video when I started. Liabilities, what you owe, loans, credit cards, unpaid bills. Equity, what's left over the owner after paying off debts. Let me know in the comments if you have any questions, and don't forget to like and subscribe for more accounting tips. Bye bye for now.